It's official. London's luxury housing market is slowing down. Areas of the capital such as Kensington, Chelsea, Knightsbridge and Belgravia, collectively known as prime central London, have boomed in recent years. But in the third quarter of this year, the number of homes sold in these places fell by a third compared to the same period the previous year, according to exclusive research by Lonres for the FT. Houses were worst affected, with sales volumes down more than 50%, and the number of flats and apartments sold fell by 27%. So what's causing this slowdown? There are several factors to blame. Uncertainty around new property taxes, the strength of the pound on global currency markets, and the introduction last year of a tax on homes held through companies have all taken some of the steam out of the luxury London housing market, according to estate agents. Both the Labour Party and the Liberal Democrats have proposed a new tax on high-value homes. This week, Ed Balls, the Labour Party Shadow Chancellor, set out more detail of what that would mean. Homes worth between £2 and £3 million would face a tax of £3,000 a year, he said. More than half of all high-value homes fall into this bracket, with just over 1 in 9 being worth over £5 million. Mr Balls aims to raise £1.1 billion a year in total. Data research company HomeTrack estimates that this would leave the owners of properties worth £3 million and above with an annual tax bill of around £26,000. The new mansion tax would affect around 90,000 households. They are very geographically concentrated. A quarter live in just one borough, Kensington and Chelsea. 90% of properties worth over £2 million are in London. The plans have caused an outcry in Kensington, where the local council leader says many of his residents are asset-rich but cash-poor. Mr Balls has promised that people who earn below the top rate of tax, that's £42,000 a year, will be able to defer their mansion tax payments until they either sell their property or die. Thousands of households in both Kensington and Chelsea and the neighbouring borough of Westminster may fall into this category. This chart shows the number of retired households with 4-bedroom homes in each area. These people's homes are all likely to be worth over £2 million. But this poses a problem. House prices are already stuttering in these areas, and many of these households are considering selling up if the mansion tax comes in. A home is only worth what someone will pay for it. So all this tax talk could turn the current wobble in the luxury housing market into a longer-term rout.